All right, back to work. Break time is over. You can count all that money you made today. You can count that later on tonight. All kidding aside, though, it sounds like a lot of you guys made some fantastic money today. So very well done. This whole week's been fantastic. It's been a fantastic month of March. It's been fun to be a day trader the last couple days, hasn't it? Now, I got some more good news for you guys tonight. The charts look fantastic right now. In fact, there's two kind of clues on the charts right now that are making it, I think, pretty easy to find some winning trades for tomorrow. So we're going to cover the clues. We're going to cover the entries. We'll cover the exits. By the time we're done tonight, I'm going to make sure everyone has a roadmap to make some money tomorrow as well. So charts are ready. Enough of the intro. Time is ticking. Let's roll those sleeves up. Go find some more winning trades on what should be another fun trading day tomorrow as well. S&P SPY is ready to go tonight. Nasdaq triple Qs are all ready. As always, thanks for joining me once again here tonight on the YouTube channel. I have 3 clues on these charts tonight that are telling me where I think the winning trades are coming for tomorrow. One of those 3 clues is right here on the hourly chart. I like to use the hourly chart, this 60-minute time frame, to give me the best overall direction in the market. So we know one big clue right now is bears still have all control of that long-term momentum. Now, I like to use these for direction, but I've got 2 probably more important clues on some faster time frames, on some tick charts that will help us time some entries. I got some great clues on the tick charts that will bring this all together tonight. Before we dive into the tick charts, then we talk entries for tomorrow. Let's check schedule for tomorrow. There's 2 things on my mind tomorrow. First, of course, is the PPI number coming out at 8:30 Eastern time. Probably not going to be as much volatility as we saw today from its cousin, the CPI report, but we definitely want to be aware that PPI number will move these markets. And of course, it's a big variable that I don't know what's going to happen for that tomorrow. So watch it tomorrow morning in our trade room. The second thing I want you to be aware of is there'll be no video newsletters next week. Next week is the 3rd week of March. The 3rd week of March is quad witching. That means I am on vacation next week. So we'll finish the week tomorrow night, of course, but just be aware though, tomorrow night, last one for a while. We'll take the 3rd week of March off here. We'll come back and keep resuming that 4th week of March. So just be aware of that coming down the pipe for next week. But we're not done yet, though. We got some more money to make the rest of the week here this week. I mentioned earlier that one big clue is this hourly time frame. We're overall bearish. 2 more important clues, though, are certainly down on the tick charts right now. And remember, if you're watching for the first time right now, all of the time frames, these are all tick charts going forward here. This is an 8,000 tick chart, upper left-hand corner, and that yellow line right there is pretty much the only indicator I use. It is the 21 EMA. I mentioned earlier, there are 2 more important clues here on these tick charts right now. One of them is right there in the middle, right? That trading range. Now, why is a range important? Well, because as we saw today, right, ranges are magnets. Ranges love to rotate back and forth. We like to use things like triangles. We use things like pendulum swings, right? Symmetry above and below. That's a big, big clue. Another big clue, though, is the strength of that move going lower. Now, why is that strong move down important? Well, because strong moves, they love to retest. So one of my favorite trades for tomorrow is I would love to look for a bear trap down there. We call these retest trades, right? Double bottom retest trades in our trade room. Take out that strong move, rotate back up again. Now, when I say bear trap, I like to wait for the breakdown. I don't like to pick bottoms on these. I like to wait for the bears to come back, try once, try twice. Once I get bears trying twice, remember higher high on that, then I know where their stops are. I find this is so much easier to time entries than trying to kind of pick the bottom or blindly buy that bottom. So once I see bears trying twice here, I can use their stops to fuel the move going higher. We saw today, right? We run lower. We're not picking bottoms. Bears once, bears twice, buy right into those stops going higher. Now remember, this is where we can add to our winner. This is where range rotation is really, really important because now we know the market wants to rotate back up, right? Back and forth like that. So as it goes higher, I like to add to my winning trades by looking for this add-on pattern. The key to this is some separation off the moving average. Like over here, right? That little pullback right there. See what barely misses that moving average? That is the separation I'm talking about. Higher high in price, separation off that moving average. Guys, if you want to make more money, the easiest way to make more money is to add to your winners during range bound markets. Now, at this point, we know the amount below, we know the amount above. That creates our target now up around those highs. Now, I do want to talk about the short back down again, but I'm going to warn you, a short up here is not going to be as easy as the long side right now. We'll talk about why I say that in a moment. I'm going to cover that short side here in a second, but let's back this out though. What if we don't get that bear trap down there? A lot of times what happens is we'll run lower and there's just so much profit taking. There's so many buyers down there. It just whoop and runs right back up again. We saw one of these this morning off the high if you're with us in the trade room this morning, but same thing off the low. If it V bottoms off that low, remember, one of the easiest ways to make money in these environments is not to chase after it. Simply draw a trend line off the highs, bring that trend line down to the lows. That will give you a channel, right? Now, here's the trick. Look left, find some prior swings. Look at those prior swing lows. Find one that lines up around the low of that channel, and you want that first test is the best test off of that low. The hardest part about these is not chasing after it. So sit tight, wait for that pullback, and this could be a bear trap. Like I'm showing you here, oftentimes we'll get below the moving average. We'll get bears trying once, trying twice, like we saw this morning, and squeeze those stops, running higher. And again, we know the amount below, we know the amount above, right? That creates targets, and we'll talk about shorting this thing down in a moment. One other variation of this that I want to remind you about too is you'll notice that we have this pendulum swing right here, the amount above, the amount below. I have that channel coming up off of that low. So there might be some money to make off that low, but here's the problem though. When it comes to ranges, the best entries are always around the edges. Look up here, right? The best entries are always around the edges. So if we don't get, like I said, I'd like to go down below that edge, take out the edge, bear trap back up again, kind of a double bottom bear trap off that low. If we don't get the edge taken out, I have to be a little bit more careful, right? A little more cautious on this. So what I'll do is I'll make a very small adjustment. If I can buy down here, this is, in my eyes, buying low. If I'm buying right here, I'm buying a bit higher, right? So I want to buy as low as I can. And if you're taking my free video classes right now, you might know what I'm going to say right now. What's the one pattern that we always look for whenever we want to buy as low as possible? It's always a technical bear trap. What that means is bears try once, higher high, bears try twice, and a slight variation, I want to get in below a prior low. This is different than we saw here this afternoon, right? It's different than the run down, bears once, bears twice, and buying into stops. See, it's very important, right? Down here, I can take a small amount of risk for a big amount of reward. In this area though, I can't do that. I gotta be very careful getting in that scenario. I wanna get in as low as possible. Again, if you're in my free video classes right now, I call these technical bear traps, right? It's a higher high in price. We get right below that low, strong green candle closing back above the moving average, just like I teach inside that free video course. That's the adjustment. And of course, as it rotates higher here, I will look for those add-on trades as we rotate higher, right? The key though is keep on getting in as low as I can, buying below swings. Okay, I want to talk about now, how do we sell off the high? Because again, I talked about earlier, that's going to be a little more difficult. Before we talk about selling the high right now though, let's slow down for a second, because I know most folks watching right now, you love these patterns. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire roadmap. In fact, I have a ton of examples of traps and add-ons. I cover so much more of this in our free video classes. I want to help you guys start making more money in your trading. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a surprisingly simple trick we use in our members trade room that literally tells us exactly where to find the winning trades trades each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that video series. That will make it easier to understand these entry patterns. The best part is it is 100% free for you. Also keep in mind too, guys, I'm going to put all the important links you'll need to learn the strategy, see all the trade examples. Most folks start making money on their own, all from that free video course. Everyone loves it. So pause the video if you want to, hit that link down there, get your access to that free video class. You'll love it. Also, too, be aware too, I post a lot of charts and videos and mindset stuff on Twitter or X throughout the day. If you're on Twitter X, give me a follow. Again, all the details will be down there for you, linked up, description of the YouTube video, along with our trade membership links down there to join us every morning and trade together at the opening bell. So real fast there, that's where if you're new here right now, grab that link, get that free video course access and learn all of these setups. Now, let's talk about now as we go higher. As we go higher here, this is what we call bullish rotation off the low. We're rotating off the low up into that range. If we go higher right now, this is going to be a lot of bullish momentum. In that situation, I have to be expecting these buyers are going to want to retest that high before we run back down into that low, right? This bullishness into that range right now gives me the confidence to buy those bear traps down here. Because again, we're bullish into that range. But if we keep running higher here now all of that bullishness now, it makes it more difficult to pick that top. Because again, all that momentum is going to want to retest the high before we run back down into that trading range. So knowing that, I'm going to make one small adjustment on the short. As we go higher here, knowing all that momentum will try to drive this thing higher here, I want to sell as high as I possibly can. And in these scenarios, there's 2 ways I like to trade it. The first one's called a crown reversal. It's a very simple pattern. It's a pullback, buyers once, lower low, buyers twice, and I'm selling above this high. Now, if you understand the idea behind this, I don't want to be selling as it goes lower, all right? I don't want to sell as it goes lower because, again, all that momentum is going to want to what? It's going to want to retest that high. I don't want to be selling as it goes lower in this type of situation. Not always, but in this situation, I don't want to sell as we go lower. I want to be selling. I want to be in the money. I want to be in the profit on this trade before we run into trouble. I'm going to get that first one-to-one target. I want to move that stop down my point of entry. Hopefully it rolls all the way back down. We can buy it back up again. Hopefully that's the case. But a lot of times it isn't. A lot of times I will get that first target, my stop moves down, and this thing will just come in and just rip my face off again. Now, if that happens, there is another way I can short that. I'm going to talk about that later on the Nasdaq. All right. Remember, these retest trades can be very, very effective, but it requires the right entry technique. We'll talk about that more advanced tactic here in a moment, right? So hold tight on that. We'll cover that on the Nasdaq. So if we go higher here, it's a crown reversal. That's one of 2 ways to sell it. The other way to do it is the easiest way to do it. We saw one today. On a faster time frame, we went up, grind lower, find that channel like that. If we go higher here, the much easier way to short this thing is that same V top we saw this morning in our trade room. We pop up, the bears come in and they whack it back down and they start grinding down overhead. I got a bunch of emails of folks making money on this pattern this morning as well. So now we do is we don't chase after it. We mark a trend line off that low. We bring that trend up top there, find that channel, mark the highs, those prior swings, find one of those swings that lines up around the top of that channel. These ones are easier because now that momentum is now turned over. A lot of my students, my newer students, they like these trades better because momentum is turned over as opposed to going up and trying to pick that top with that crown reversal. These are more difficult on the emotions, right? Because you're going against all that strength going higher. This one is a lot easier on the emotions, and because of the momentum shift, it's a lot easier to trade this in most cases, that V-top reversal off of that high. And again, we know now the amount above, the amount below, we know how ranges work, so leave that runner and then buy it back up, like I mentioned there earlier. Now, there's one thing though that you want to be aware of. If we were to pop up like this and start to grind, right? Grind. Now look over here, right? We saw a very strong, sharp run higher. Remember last night, was it last night in the video I said the best entries are scary, right? The best ones are scary. Okay, the best ones are gonna run up, the buyers will try a couple times and right back down again, all right? It's almost scary how fast it goes. What is more misleading about trading sometimes is sometimes it'll pop up and begin to grind. If it pops up and starts grinding, it's almost a guarantee this is going to pull back and keep going. So one thing I will shy away from is trying to short this market if we get that pop up and things begin to grind going higher. On the Nasdaq, I'm going to talk about how we trade something like that. All right, it's a little more advanced here, so we'll cover that in a moment here on the Nasdaq. But I'm warning you right now, make sure you understand the difference, right? There's a very big difference between a strong shot up that pulls back, buyers try, and collapses back down. Very big difference between that and a pop and grind. Grinders are a lot more difficult to handle. We'll cover that now on the Nasdaq. Speaking of Nasdaq's getting lonely over here. Let's do the Nasdaq here now over in the NQ. Again, I like to use these hourly time frames to give us the best overall direction, but we're not going to trade off those in our trade room. Before we dive into the tick charts though, if you're enjoying these videos here tonight, please help me grow this channel by hitting that like button and make sure you subscribe, because YouTube rewards me every time you like, share these videos, and subscribe to our channel. I know we're all busy people. I know we're busy counting our money from today. I'm kidding with you guys. I appreciate you all. Thank you so much for the likes, subscribes, all the ongoing support. Now I promise I'm done begging for attention here. Let's dive in and talk about the tick charts here. Over on the tick charts here on the Nasdaq, a 4,000 tick chart, you'll see it's quite different there than we saw on the S&P. That's because the S&P is a lot more volume than the Nasdaq. Right away right now, you can easily see this Nasdaq is a lot more bullish than we have on the S&P, right? We're definitely still bearish overall, but you can see right away, we're up into a range right now, right? That tells me that the same game plan I mentioned earlier on the S&P, I love the idea. There's that strong run down right there. I'm gonna zoom back in again here. I love the idea of that double bottom retest, double bottom bear trap, right? Strong run down, it wants to retest that low. Strong moves love to retest. And because we have that range up above us, it would make perfect sense, right? To take out that strong move and then initiate that rotation going higher. So all of the same trades we mentioned earlier on the S&P can be applied there as well. The one difference though is, one add-on I would give you that we didn't talk about earlier on the S&P is remember, a lot of times in a range market, we'll see a breakout. We'll get a nice bear trap down here, 2 tries, right? And pop back up again. But for whatever reason, that strength is so strong, we see another leg going lower. Now, this is very important. In a range market, the breakout leg is a measuring leg. So what I mean by this is now once I know where that pullback is, now I know how to find that measured move. Okay, we call these retest trades in our trade room. Somewhere between that low and that measured move, right? That is where the money is. Now in this situation, this will feel very bearish. Again, the best entries are always quite scary. They are, right? That's just the more mental, the more uncomfortable you can be, the more money you'll make in trading, right? That's just the way it works sometimes, a lot of times actually. So if we do get that run going lower, do not confuse this with an official breakout yet. It's still a range mark at that point. So once it pulls back now, same thing, bear trap, 1 try, 2 try, trap those bears in, And again, remember, anybody who sells right here, they're taking their profit. They're buyers down here. These are rookie traders getting short right here. This thing oftentimes squeezes very, very hard. These double bottoms, these retest trades we see in our trade room. If you're with us in the trade room, you know these are my favorite trades we get sometimes here. And again, remember, add to your winners. Get that separation, get that higher high, jump in there below that low, right? Keep adding to those winners right here, right? No surprise there. We go up, shallow pullback, higher high, no surprise. Everyone's buying. And again, you take that 1-to-1, right? That 1-to-1 stop moves up from there. Most important thing though is, right, as we go lower, don't shy away from those retests, right? Those up the bottom. Remember, the size of the breakout leg, measuring leg, somewhere right in there is what we'll look for. Same thing going higher, right? Same going higher here. We run up. I mentioned earlier that as we go higher, we're now fighting that short-term momentum. So I like the idea now of the crown reversal. Same pattern we mentioned earlier on the S&P, lower low, little higher high right there. I like the idea of that crown reversal. Now, if it does keep going higher, and again, remember, 1-to-1, be disciplined, take that quick target. When you're going against the momentum, it's quick first target, it's get rid of that risk. And again, I teach this stuff, by the way, in more detail in that free video class. Grab those links I mentioned earlier in the description of the YouTube video. Now remember, in this situation, same thing, right? Breakout leg, measuring leg. Breakout leg, measuring leg. Somewhere between that high and this measured move, right? That breakout measure move, somewhere in between that area, that is where I'm looking for in this case, the bull trap, right? Makes sense? Okay, so once we now make that run higher, we're still an overall bear market right now, even though we're very bullish. Now, the good news in this is that retest trade now, I can be a lot more aggressive on the entry, right? Because now I know where we have a level of resistance. Makes sense? I don't want to be too aggressive on the first one here because again, it's a lot of momentum, and even though I like pendulum swings, they're not enough in that situation, right? Not in this bullish environment we're seeing right now on the short term on the Nasdaq. So once I get that double top retest, once we complete that measured move, now buyers once, buyers twice, trap those bulls in, always a lower low. Why a lower low? Because I need more buyers in there. Buyers want to buy low. So as it goes lower, they try once. They goes lower, they try again, right? One try, two try, lower low. Then I know where their pain is, right? And now I can sell into those stop losses, right? Short the sucker back down again, add to that winner, like we always do on these videos, right? So running back in there, right? That is that double top retest. Now, let's kick this up one more notch, right? I'm going to go a little more advanced here right now on the Nasdaq. Let's talk about ranges, right? Ranges. For example, we may see that run down and we may go right into a trading range here. Now, ranges love to rotate. So one of my favorite trades in these scenarios, don't lose sight of the bigger range, right? But again, ranges love to rotate. So one trick we like to use in our trade room is the amount we go above that range going lower now. I can take the amount above, I can project now below. This becomes a primo spot for a bear trap. Bears once, bears twice. What's cool about these though is now as it rotates back up into that bigger range above, if we're lucky, we'll see a breakout and a breakout pullback off of that trading range. So in all reality, even though ranges can be more challenging for rookie traders, once you learn how ranges work, once you learn how to measure the amount above, the amount below, they really set up for some great bear traps. And again, if you understand the idea of the entire range rotation, kind of the macro range, if you want to call it that, then buying that breakout pullback is a very easy trade to justify, right? Momentum's already turning now. We're rotating back up again. I always like to use two-legged pullbacks during breakout pullbacks. I can't teach everything in tonight's video, but again, grab the free trading classes. We talk about that more. But a two-legged pullback, breakout pullback, going higher. Same thing happens overhead. We pop up overhead into a range up top here. Again, the market's going to want to rotate back into that range back lower. What happens oftentimes though is we see a range up here. We go lower first. This is where it gets tricky. Lower first, pop up higher now, right? See what I'm talking about? Now we measure we call these pendulum swings. Now remember, I still want that same entry pattern, right? That same 1, 2, that same, what was it called again? A crown reversal, because again, we're very bullish at that point. Got to be that lower low. Got to be that same crown reversal pattern, that same bull trap pattern. And then as we go lower here, now momentum shifts, running lower, two-legged pullback. Think about a measured move, A, B, C, D, right? The underbelly of that trading range. And we're whacking that thing right back down into that range overhead. So this is obviously a little more advanced here. But again, once you get good at finding ranges and trading that rotation in context with this larger range, and this, of course, the higher time frame hourly chart is bearish overall. I like that bull trap off the high. I love that breakout pullback off of that low. And again, we'll keep on trading this rotation until something changes. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Once again, guys, I'm going to put all the important links you'll need to learn the roadmap, time better entries, get your confidence back, get yourself back in the green again. Again, start first with that free video course. Enjoy all the trade examples in that free video series. Then come join me in our trade room, and we'll do it together every morning at the opening bell. In the meantime, fantastic job so far. Let's keep the winning trades going this week. Be well, be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.